I'll just open with this today. The rate of home sales is picking up, especially compared to last year at this time. The number of homes in contract across the country has risen for the last few weeks. The purchase mortgage applications are up for 5 weeks in a row. It seems like mortgage rates that are getting closer to 6% are starting to shake loose a few transactions. These moves are small and it's early. It's not a big rush of home sales, of course, but we're just looking for any signs of resuscitation for this body, which has been nearly dead all year long in most of the country. And we can finally start to see some. So in the video today, we'll look at the latest pending home sales data and also the pricing data where we can see just a tiny bit of heartbeat in the home buyer activity. The home buying metrics are showing slightly higher than a few months ago and higher than last year at this time. Last year in the fourth quarter, the skies were darkening quickly as the mortgage rates rose to 8%. Now, it's too early to declare victory. Of course, we're just teasing out the first signals of hopeful recovery in the weekly data. Next week, we're doing our October webinar. That's Thursday, October 10th at 10 a.m. Pacific. It's a super fun time to be watching the data deeply. So where and how much can we see the home buyer behavior changing right now? We'll cover all the details in the webinar. If you really need to understand what's happening, especially at the local level, we'll spend the full hour diving into that data. So there's a link in the description below to register and join us for the webinar next Thursday, October 10th. Click that to save your spot. There's so much going on in the data right now. Don't miss it. At Altos Research, of course, we track every home for sale in the country every week. All the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and it's now the end of the third quarter, 2024. It's been a really weak year for home sales, but maybe, just maybe, this market is turning the corner. So let's look at this week's data. There are 362,000 single-family homes in contract. So starting with the pending home sales today, that's been climbing all September. That number has been climbing all September from like 357,000 earlier in the month. It was just under a 1% increase for the week. And we compare that to last year and 2022 when home sales were falling by 1% per week. So this is measuring the total count of homes that are in contract right now. We're showing 6% more homes in contract than last year at this time. So homes stay in contract for 30 to 40 days. At the end of the month, a bunch of sales close. So next week, we'll have more sales completed and fewer homes still in contract. So there's a step down each month at the first week of the month. So next week, we'll start October with fewer sales still in the pending process. There are 362,000 single-family homes in contract now. Next week, we'll maybe have 350,000. As a bunch of those sales will have closed. So that's the total homes in contract. When homes are taking offers faster than the sales are closing, the pending count, this pending count climbs. And that's what we had in September. So when we look at the new contracts pace, the homes that took offers and went into pending status this week, we want to know if that pace is up or down also. And in fact, the pace of new contracts picked up 1% this week to 63,000 single-family homes with another 12,000 condo sales underway. So we're showing here this new pendings data. The new pendings are up 1% for the week, and this week saw 11% more contracts started than last year at this time. So 11% more offers this week than last year. In fact, this week there were more sales started than either of the last 2 years. Remember that, this was when mortgage rates were spiking in the fall of 22 and 23. The brakes were on hard for the fourth quarter, both those years. So the comparison, while we don't have a lot of sales happening, is definitely more than either of the last 2 years. And you can see the lines here from 22 and 23 really tanking at the end of September. So the weekly number ticked up from last week. That's a good sign. The comparison against last year is getting very easy now, so we should continue to show year-over-year home sales gains for the whole fourth quarter. In this view here, we're of the weekly new contracts pending. You can see the dark line at the right end of the chart is definitely coming in ahead of the last 2 years. See that steep drop in the 2022 line in particular. So these comparisons are now easy, and it's the fall, so sales won't continue to climb week over week. But if we continue this relative strength, you're going to see, you're going to start to hear the headlines shift positive. So this is the evidence right here that the consumers are reacting just a little bit to cheaper mortgage rates. Now, I've been pointing to this moment for several weeks now, and it just hit. The question is, does the momentum keep up into the first quarter of next year? Because that's when it'll really count. So inventory has been climbing too. Last year at this time, the people who were expecting mortgage rates to fall in 2024 would ask me if falling mortgage rates would potentially lead to a lot of pent-up sellers in 2024 who would perhaps flood the market with listings, which might then be imbalanced with buyers and lead to a price correction. So remember that fear, that question from back then? Like at the time, it seemed very clear to me that if rates fell in 2022, inventory would fall also. If rates rose, inventory would rise. So that fear was misplaced. And it turned out rates rose or stayed high all the way into the third quarter of 2024, and inventory rose that whole time too. So now rates are falling. They're past their peak. What's going to happen with inventory? Inventory is still rising right now. It's not super late in the year for the supply of unsold homes to keep climbing, but it could be that maybe we're seeing lower rates shaking loose some of those sellers who've been sitting on the fence for 2 years. I think we're probably seeing investors in the big markets like Central Florida and Texas maybe look to unload some underperforming assets. Those states, which had appeared to have topped out in inventory a few weeks ago, have recently had supply re-increasing. The sales rates, though, in those places are inching up too. So it's not just inventory dumped on the market. More home sales is really meaning slightly more homes for sale means slightly more sales can happen. So we had the Hurricane Helene this week, which disrupted a big chunk of the country. So next week, I'm looking for actually declines in inventory and new listings. Florida, Tennessee, Georgia, North Carolina. It can sometimes be surprisingly difficult to see the immediate impacts of natural disasters, but this was a big one, so I expect we'll be able to track it. It wouldn't surprise me to have inventory knocked down a couple percent next week, and that'll throw a wrench into all our forecasting models, so we'll keep a watch on that. Meanwhile, new listings. There were 63,000 new listings unsold this week with another 9,400 immediate sales. It's not a lot, but it's slightly more. It's a slightly more healthy pace than last year. So I chatted with an Atlanta broker friend this week who mentioned they've suddenly had a few more multiple offer scenarios on the best listings, which hasn't been happening all year. The immediate sales rate where we would track that, the immediate sales as a percent of inventory still is about as low as it's been since we've been tracking. So the number doesn't show any real broad gains in demand despite that anecdote, but it is something to keep watching. So in total, there were 6% more sellers this year than last. That's in the range where it's been all year. It's not a flood of sellers, and we really still want to see more sellers. We want to see that continued growth in the listings volume. That means more selection for buyers and ultimately means more sales. The new listings count dropped this week from last, and I mentioned last week that I expected it to do so. In this chart, you can see this year's line is generally fewer sellers than in years prior, except for 2023. We've talked about how the market was really shutting down hard last year, so sellers were running away. And so what I believe, this is a healthier market requires growing new listings, and it has been. So 5%, maybe 10% more sellers each week than a year ago. Now, at the same time, as I've mentioned, I'm always on the lookout for conditions that get imbalanced. Too many of one side. So if, for example, that fear of lower rates will shake loose a bunch of pent-up seller supply, maybe too much, that forces prices to plummet. So that's the fear. If that were to happen, we'd see it in this new listings line here. It would have to start climbing above the gray lines of the past. We don't see that. What we see is maybe healthy market growth. Do I dare call it healthy? Healthier, maybe is relative, back from the dead. Whatever the label, we gradually see fewer sellers this fall. We will, because it's the fall. And it'll be interesting to see if we have any relative upward trend compared to the last 2 years. Mortgage rates have moved sideways for a couple of weeks now, but what if they drop into the 5s? That's worth watching here, this new listing supply. We're going to watch how supply reacts as well as watching demand react to the newly lower mortgage rates. Home prices are holding up also. As I mentioned this last week, basically all the measures of home prices are showing just slightly positive gains for the year, up 2 or 3%. None of the price measures are showing big strength, of course. In fact, they're actually the weakest they've been in like 5 or more years, but they're up, they're positive. Prices stayed resilient through the weakest demand times in the market this year. Now with these lower mortgage rates, as I've been showing, what look like maybe green shoots of buyer demand, it seems unlikely that home prices will face renewed downward pressure. For buyers right now, it's slightly improved demand for homes at the prices the market is currently asking. For me, that applies a scenario where home buyers have been sitting on the fence, sitting on the sidelines, waiting for a big price correction, is unlikely to materialize. We don't see price declines really anywhere in the data. Now, since rates are down and we're past the peak of pricing time for the year, mortgage payments on a home you buy today are like 10% cheaper than they were last year at this time. Payments are 14% cheaper than the worst point of May this year. Payments are down, home prices are not. Those same payments are 53% higher than they were at the cheapest moment during the pandemic. So nobody is fooled into thinking these are bargains now, but they're 14% off the peak. So let's take every improvement we can get because it helps home buyers. The median price of all the homes on the market is $443,000 right now. That's down a tick from last week. It is about 1% more than last year at this time. The median price of the newly pending contracts, so remember there's more contracts this week, this is the price that people are buying. It actually ticked up for the 3rd week in a row to just under $390,000, just a tiny bit. This is the view that we have here. So the median price of the newly pending contracts. These contracts, are staying 3 to 4% more expensive than a year ago, in that range. And that's roughly where we're now expecting to end the year. Home prices up maybe 3% over 2023. I don't see any evidence of dropping further. I also don't expect any conditions to create any opportunity for home prices to jump meaningfully, at least not until the spring. That's a long way off though. So in fact, you can imagine how, that stays true for a whole nother year. And we wrap today with the leading indicator for future home prices, and that's the percent of homes on the market with price reductions. This percentage has been hovering around 40% for several weeks now. There's a bit of a cap on price cuts between discouraged sellers withdrawing listings and with just marginally more offers being made for purchase. So that's keeping a cap on the price reductions across the market. So here's what I'm looking for next with price reductions. So see the curve here for 2024 is now fewer than 2022. That period in 2022 led to year-over-year home price declines in the spring of the following year. That was like a 4 to 6 month lead time. If, because we have a few more buyers this autumn, that leads to an earlier peak in the price cut season, what I'm watching for is if this year's curve trends under 39% in October, maybe finishes the year under 36.5%, that would be 36.5% of the active listings at the end of the year had taken a price cut from the original list price. If it comes in fewer than that red line here from last year, that would set 2025 up for more likely home price appreciation, more likely than we had this year. This is a leading indicator, is sort of coming in like the other measures. None of it is pointing lower. It's all flat. It's less annual price appreciation than we used to get pre-pandemic. In this post-pandemic era, we're much more likely to tread water on home prices for another year or more. Now that could change quickly, of course. The big trends from earlier in the year are finally shifting now, and that's why we do this data work each week. If the buyers really start moving, we'll see it in this data quickly. If sellers come out of the woodwork, we'll see that too. So for your home buyers and sellers, these conditions can change fast, so it can be very impactful for smart decision making, and they need to hear the data coming from you so they know how to act. So you should join us at Altos Research. Go to altosresearch.com and book a free consult with our team. We will help you know how to talk about the data and the market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started. And also the next webinar is next Thursday, October 10th. Don't miss that for the full hour-long deep dive. All right, thanks everybody.